All right, everybody. My name is Parker. I am here just kind of introducing everything. I'll turn it over to Masheka Turner in a second here from Bright Sky. She's been kind enough to do a nice little online workshop for us. She's been a member at the EC for a little bit. So I'm excited to hear what she has to say, and I hope you all tune in and get something good out of it. Masheka, I'll turn it over to you. You can do your thing.
All righty. As again, I'm Masheka Turner. Thank you so much for giving me a few minutes of your time. I am the owner of Bright Skies Business Services, and we have been in business for 4 years now, closer to five. So what we do at the heart is we are a outsourced CFO controller bookkeeping firm. But what makes us different is we don't do taxes. We focus on the other side of business with cash management, profit strategy. I find that there is a lot of people that can help with the taxes, but there's never a conversation of how do I save for taxes? How much should I be putting aside for taxes? So we focus on the business side of getting you there with cash so that taxes are not a problem. We also help with things like pricing, profit margin. Again, there's a lot of people out there to help us with taxes, but a lot of accountants don't really even discuss those things. And so that's where I've found my niche in this market, and that's what I enjoy doing. How I got into this is I was in corporate America for a long time, and although it was good to me, I started helping friends and family with their businesses, and I just got a joy and passion from that, like I never got in corporate America. So I started to really think about how I could turn this into a business. And when I originally started, I thought I was going to be a typical accounting firm. We would just help with the books, maybe some tax work, and that would be it. But then the more and more I got into it, I kept finding a common theme. And that common theme was the cash management side. How do I get there? How do I know if I'm charging the right thing? And so it made me start really thinking about how can I help people in that way? And then just to tell you a little bit about my own story and my weird paradigms with money. Um, so my mother, she was somewhat of an entrepreneur. She had an energy for making a lot of money. She could make a lot of money, but she was not a good steward of it. So she would lose it as fast as she got it a lot of times. And I remember thinking as a child or as a pre-teen or whatever, how money did not bring me security. So you think about it, most of the time when you have money, you have security, meaning because you know you don't have to worry about the bills being paid because that's what money brings. Well, because I saw her shift in the way she handled money, I didn't get a lot of security from it. And so as a result, it made me hang on to every dime I made as I got older. I was like completely the opposite, where she was free with money and I think one of the reasons why she was always free is because it was always coming back around. I was the opposite. And even though I had savings and I was able to do a lot of things, I didn't get a lot of joy from it because I felt like I was holding on to every dollar so tight. And so I thought, well, how can I get some balance in this? Because if we got clenched fists, we also can't receive anything. So I was like, how can I get some balance where I understand the energy of attracting money, but I also not trying to hold on to every dollar? How can I become a good steward? So it only made sense that my business transition into the cash management side of how can we enjoy what we have, but how can we put a system in place to be good stewards over it? Because I realized that's what the heart of it was managing what we have. So as I started to get more into that, I was introduced to profit first, and I enjoyed it so much that I decided to start become certified in it and helping my clients with it. So I'm going to tell you a little bit how that goes. Again, Masheka Turner, Bright Skies Business Services, and this is how we implement profit first cash management into our business using bookkeeping as the foundation, because bookkeeping has to be in place for all of this to work. So let's just start out with it. Okay, so uh, does anybody know what an axiom is? Okay. So an axiom is it's like an old way of thinking. It's something that we think is true just because we've always heard it. So raise your hand if you ever heard this. One of the axioms in business is that for the first year or the first year after, you shouldn't even think about profit in your business because profit just doesn't happen. So because that's been the way that business has always been presented, as a society, we genuinely believe that's true. Raise your hands if you've ever heard that before. I can see you. So, what if I gave you a different framework for maybe that not to be true all the time? All right, so let's go into it. Okay, so of course, everybody that's been in business for more than 6 months, there's always the old story. As long as I keep making money and growing my business, it's going to get to a point where it's going to satisfy me. I'm going to have more than enough money to do everything I need to do. But what generally ends up happening is we grow it, but we're spending usually as fast as we make it. So of course we know what happens with that. So I'm going to date myself a little bit. Who's familiar with that old movie Little Shop of Horrors and Seymour and the blood eating plant? So a lot of times our business becomes like the Audrey, that blood eating plant, where we're giving it all. We all of our fingers are pricked, and we just the poor little lonely business owner. Meanwhile, our business is getting bigger, but it's not necessarily giving us anything back. And so I want to talk about how to be intentional about our business giving us something back so that we don't become like poor Seymour, giving our business our all, our time, our money. All feels like our blood sometimes, and it's getting bigger and bigger, but we're getting lesser and lesser. All right. So raise a hand. Who's familiar with Parkinson's Law? Okay. So Parkinson's Law is what it is it's related to time, and it talks about human behavior. So for example, if we're given 6 weeks to complete a project, most human beings are going to complete it in 6 weeks. You hardly ever are going to run across anybody that completed in 3 weeks. And that's typically how we are as human beings. The more time you give us, the more time we're going to use. And it turns out that humans treat everything like that. So if you take us somewhere and you put a lot of food on our plate, we're going to do our darndest to try to finish off the food on the plate. Uh, when we first buy a tube of toothpaste, when it's full, we're going to put a big old glob on that toothbrush. Well, the less that we have, we start using smaller dabs because we realize that a smaller dab will do that. Well, come to find out that humans also equate that with money. And if we have money, if we have a lot of money sitting in one account, we try our best to spend that money. So what Profit First is going to show us how to use our human behavior as related to our money. All right. So the idea behind it is smaller plates. Instead of having all the money in one account, we're going to break it down to smaller plates and smaller portions. So let's talk about that. All right. So does anybody want to be on the hot seat? Raise your hand if you do. I can't, yeah. Does anybody want to be? Is anybody in the chat? Okay. All right.
So I'll do it.
Okay. So, all right. I think I see somebody that's in the chat. Okay, so I'm gonna ask Taronda. You want to unmute and be on the hot seat for a second?
I raised my hand for something else.
Okay. Okay. Well, what did you raise your hand for before we put you on before somebody else goes on the hot seat? Yes, ma'am.
When you asked, did we hear about no profits the first year of business, for that to be the expectation?
Yes. Okay. Good. Good. So keep that in mind. Okay. Now who wants to be on the hot seat? You say you'll go?
I'll go.
Okay. All right. So, okay, just hypothetical. Right now, if you made $1,000 today, tell me what you would do with it in your business.
So my mate, okay. Well, I guess the first thing is I'd pay people who had already done work, or people who had invoiced me for products. I try to get whatever I've spent or upcoming bills paid first.
Mm-hmm. What else?
So if I didn't have a commitment for that, I'd actually probably look to shore up inventories. So we're in e-commerce, so we're always turning inventory. So I'd probably see what would be the next inventory I could buy.
Okay. So, quick question. Where do you get paid in that, and what happens with the taxes that was made on that money? What happens with that?
Well, that's a good point. I don't, right now we're fortunate enough we don't have to pay ourselves, but that's not going to last forever. And the second thing about taxes, actually, that brings up an excellent point. I don't put away money for taxes. So I guess you found something I need to think about. All
righty, good. All right, so let's talk about this. All right, now imagine this. So we've already talked about Parkinson's Law. The more money that we have in our account, the more we usually spend. So think about this for a second. Now let me ask you a quick question though. Do you pay sales tax?
I do quarterly to Tennessee. Yeah.
Okay, so now let me ask you this. Are you putting your sales tax money aside so that we can make sure it's not mixed in with our other money?
Well, honestly, we don't. We sell nationwide, so our Tennessee sales tax is not huge right now. But we honestly, we don't set that aside. We put that in the general fund and we take it out quarterly when we need it.
Okay, so let me ask you, if I throw something out at you, tell me what you think of it. What if you had a bank account that was strictly for sales tax, and you looked at your sales weekly, daily, however you looked at them, and you went ahead and put the sales tax portion in that account and separated it from the rest of your funds? So when sales tax come around, you don't have to figure out what that portion should be. Do I have the money to pay it? Because you're separating it from your sales daily. Because remember, that's not your money.
Yeah, I see where you're going. I think that's pretty logical, and I think for us it'd be very easy to do.
Okay, all right. So just want to throw it out there. All right. So now let's talk about covering the 5 areas of business with bank accounts. So no matter what kind of business you have, there's 5 areas. There's income or sales. There's profit, owner's pay, taxes, and operating expense. I don't care what kind of business you have. There is 5 areas of business. Imagine if you had a plan to track every dollar that you make, and you could cover these 5 areas of business. So we're going to talk about that. All right. So getting back to those smaller plates. So as a profit first professional, one of the things that we've done is we've studied the way that the most profitable businesses that have been in business for that magic 10 years or however long, they have something in common. They don't just spend their money. They have a strategy for spending their money. So if we look at this chart, let's just look at column C. someone making 500 to $1 million. Instead of just spending their money, they break down how they spend it. Now, let me say with this chart is not where you need to start. This is just a guide. Truth be told, most businesses are not ready for this chart, but we can start doing something from where you're at today. But just imagine we start with this. So first of all, let me say what real revenue is. Real revenue would be a situation of the money that you actually make. So I'll say this. Say if you made $10,000 today. If you're selling a product, we know that at least $920 of that will go to sales tax. So we would want to separate the sales tax from that $10,000 to get real revenue, because sales tax money is not your money. They're just letting you hold it for a little while. So you guys get where I'm coming from on that. Cost of goods sold, same thing with that. You would subtract that, and so you would go with your real revenue, meaning money that's actually yours. If you're a service-based business, that's typically 100%. But just to give you an idea of what real revenue is. So imagine this. They go ahead and they put 15% off the top into a profit account. They go ahead and pay themselves for their owner's pay, taxes 15%, and the rest goes to the operating expense of the business. So that way, remember when I talked about those 5 areas of business? All 5 areas of the business is covered because they have went ahead and put a strategy in place. So let's just talk about what a real example looks like. So here's an example of an income statement. Is everybody on here familiar with an income statement? Okay, so let's take a look at what real revenue looks like. So first of all, what usually happens is people look at this and they say, oh, great, I made $108,000. And it's like, not really. And I'll tell you why. Because generally what happens is we look at the sales and we look at the revenue, but we don't typically look at the cost of goods sold. And so one of the things that I always say is sales is vanity. Profit and cash in the bank is sanity. Because what generally happens is I made $108,000. No, you didn't. You really made $33,000, because what happens is you have the real revenue. You have the total sales of $108,000. And once you subtract out that cost of goods sold, it's really $33,000. All right, so let's imagine that the owner of this company has implemented profit first into their business. Based off of their allocation, they went ahead for the month and did 10% profit. They did 29% owner's pay. They took their taxes out, and then the rest went to the operating expense of their business. So they've been able to cover every area of their business, but they've been intentional about taking profit off the top, because typically we don't even think about profit. We usually just leave it in with the rest of our money, and it ends up spent. So does everybody get an idea of where I'm going with this before I move on? All right. So let's go into it. So in reality, what generally happens is, even though people in the accounting industry like me, we like to give you guys income statements, balance sheets, cash flow statements. When it gets down to it, most business owners are doing bank balance accounting. And so again, we're always looking at the psychology. So I'm like this, if we're going to do bank balance accounting anyway, how do we convert the two to deal with the psychology of what you're already doing? And so again, let me say this, bookkeeping comes in order because, let me just go back, because if you don't know what your numbers really are, which comes from bookkeeping, there is no way to get the allocations right. So even though we are doing bank balance accounting, to know what the allocations truly need to be, we do need to have our bookkeeping in order. So let me make sure I say that again. But a lot of times we're doing bank balance and accounting. So what we usually say is, instead of trying to take people all out of their system, let's just leverage the behaviors they already have. So now let's talk about the actual breakdown. Now, usually with my clients, I don't recommend 5 bank accounts out the gate, but this is what profit first really looks like. Imagine this. If you allow all your income to come into one account. So we have all of our money that comes into one account. We're breaking down into small plates. Now, imagine profit. We went ahead and took that out first. I know that we've been conditioned to believe that profit is not even a conversation. But believe me, everybody can take out profit, even if it's nothing but 1%. If you get in the habit of putting 1% of your sales off into another account and get it separating it from this main money, you'll be amazed at what will happen in your business. Owner's pay, being intentional about paying yourself as an owner, because from running my business myself, I now have a staff and a lot of expenses. I know that it gets to a point where everybody gets paid in your business except for you. So being intentional about paying yourself, because one of the things that I believe is these businesses are here to serve us, not the other way around. If everybody gets paid except for the owner, it gets to a point where we're wondering, why are we even doing this? The next thing is separating your tax money out. So we know that come rain, sleet, or snow, like it's doing outside now, the tax man coming. They don't care about what happens in our relationships. They don't care about what happened in our business. April 15th, they want their money. Imagine that you have a strategy in place to always have your tax money. And then operating comes last. And the reason why it comes last is because we want to force the business to stay in the percentage that we've given it. So if we have made it up in our mind that we want our business expenses to stay at 50%, then that means you take out these items off the top. So it's forced to stay here. Does everybody get where I'm going before I move on? Okay. Does anybody mind unmuting and telling me how they feel about this so far?
Masheka, this is really good information, but can you repeat what you just said?
About?
You just said that you broke down the different areas, and then you said if you've allocated X amount of money for operating expenses, that you need to make sure that there's a breakdown between the others. Right.
So what I said was, if you have made it up in your mind that your business expenses are going to be 50% of your business, right? You said that I am not going to let my business expenses be 50%. Well, if you take out 50% in profit, owners pay, and taxes, and all that's left is 50%, that's what the business has to operate with. So this is about being intentional about taking off what serves you in the top and then dealing with the operating expenses of the business. Because a lot of you guys as business owners, you know what happens. The operating expenses start growing out of control if we don't have a strategy to stop them.
Yeah, I think this is great. I mean, just looking at here, so we need to figure out what percentage each bucket is going to take up of the income and revenue, and then we need to allocate. And it's just, my CPA just mentioned, she's like, you have all your money in one account. That's a bad idea on a few different levels. And so now I'm looking for those different places to put the, just kind of trying to diversify just that bucket instead of it, from a security standpoint, if something happens, that they go out of money and a few other things. And so, perfect timing. So what I need to go back and do is to allocate how much each one of these buckets should be, because I know I'm not doing that.
Right. So first thing, let me say this, and I feel like the accounting industry, we have not served clients, particularly entrepreneurs, in the best way with. So a lot of times they'll say something like that, but they don't really go off into how it could serve you. So they're absolutely right with saying that, but I feel like it would have been more impactful if they had took it a little further to say, what about your taxes? What about paying yourself? And that would have made you think about it. Oh, that's the way that it serves me. So let me get on this. Let me get a strategy for doing this. And also, let me say this. In order to know what in order to even know what this breakdown is, this is where bookkeeping has to be in place. Because a lot of times we'll look at our bank statements, but our bank statements, all they show is transactions going in, going out. They don't necessarily tell us that we spent $500 on marketing last week. They don't tell us. And so that's why bookkeeping has to be the foundation, so you can even know where your expenses are. So when I showed you that income statement, you could see how much the cost of goods were. You could see how much the office expenses were. That's where you can start. And reach out to me. I will be happy to kind of give you some tips on how to get this going in your business. All right. So does anybody have any other questions about the accounts before we move on?
Yeah, one more question. For the purpose of this, why are you separating profit and owner's pay? What's the goal there?
Yes. So the reason why you're separating profit and owner's pay, first of all, you need to get paid because you are the owner. That's the first reason why. The second reason is owner's pay is how we make our business serve us. So if anybody on here is a business owner, who is familiar with entrepreneurial poverty? And what that is it goes back again to everybody getting paid but the owner. So for me, this is about legacy. This is about creating other opportunities when I don't have to work. And how can I do that if everybody in my business is getting paid and I'm not even making the room to pay myself to invest in real estate, to invest in creating my own bank, whatever I'm investing in? If I'm not paying myself, how can I even have that conversation? Second thing about profit, and we're going to talk a little bit about this down the road, but imagine this. If you could pay yourself a quarterly profit distribution, if you wanted to do something nice for your employees. So imagine this. All this money that you're saving for profit every quarter. So there's one coming up March 31st, June 30th, September 30th, December 31st. Imagine you could go over there and get half of that profit money. And I'm going to tell you why half. The reason why you're only going to take half is because half of it is going to be an emergency fund in your business all the time. So if you have a laptop breakdown, if you need to hire an extra person for this temporarily, you always got a little cushion. That's the reason why half. And the other half is, again, it's something for the business owner. If you wanted to take half out and take your family to Italy, whatever you wanted to do with it, you don't have to worry about taking money from other areas of your business, because not only are you paying yourself as an owner's pay, you're also being intentional about giving yourself profit. You know, some people, I'll tell you what I do personally. Every quarter, I take my profit out. I take half of it out. I do something nice for my employees. I fund my retirement account, and I usually buy myself something nice, or usually I go on a vacation. But I am intentional about this business serving me. And if everybody is getting paid except for me, then it's not serving me.
That's very helpful.
So I think too, have you had some of these struggles with just kind of managing it all with the cash? All right, so let's go on a little further. All right, so of course, we've always been taught that sales minus expenses equal profit. Well, what if we turn that on its head and said sales minus profit equals expenses? Because we're going to take our profit off the top. And like I say, I understand everybody can't start with taking 1% of profit off the top. I'm sorry, 5% or 10%, but everybody can take 1% or 0.5%. I guarantee you today, if you start taking a 0.5% of your sales off and putting it in another account, I guarantee you it will not affect your cash flow in your business. All right, let's move on a little further and talk about how we set this up. Okay, now, temptation. We know that the reason why we separated all this money from our main account in the first place was to keep from spending it. So let's remove temptation. So I put some chocolate chip cookies here because this is the main temptation for me. This week, I'm hoping I'm able to get out of my house by the end of this week because we've been doing a lot of snacking around here because all the temptation is trapped in here with me. So we're going to talk about how to remove the temptation and protecting our profit and our taxes. All right, so imagine this. We talked about our 5 bank accounts, letting all of our income come into one account. Now, this profit and tax, imagine this. Most of us deal with one bank account, with one bank, and that's totally fine if you're disciplined enough. I'm not disciplined enough. So I have my main bank account at Regions, but I have actually moved my profit and my tax account over to another bank that I have to get in my car and drive to. Because Regions, I can just log on. If I say I need some money for this, I can just log on and transfer it. If I can just log on and transfer it, what is the purpose of me trying to save up this profit and tax? So I know when March 31st comes and it's time for me to do something nice for my employees and a profit distribution for myself, if I don't have it mixed in my account where I can just log on and look at it every day, then it's easier for me to save it. My tax money, April 15th is rolling around again very soon. I'm not worried about April 15th because all of my money for 2020 that I'm going to owe is over there in my tax account. I mean, I do quarterly taxes, but when it's time to settle up, I'm not worried about it. Typically, I actually save a little bit more than I need because when it's time to pay, I know I'm going to get a little bit of a treat for me because I've saved more than I need. All right, so we're going to remove the temptation by putting our profit and our tax over in a different bank so that we can't just get our hands on it. And then, of course, we're going to pay ourselves owner's pay and then the expenses. So this is typically what it looks like for me. And I have an allocation spreadsheet that I have. But what you do is just drop in your money and it has everything in there. So the percentage for profit, percentage for owner's pay, percentage for taxes, percentage for operating expenses. I know exactly where I need to transfer to the account. I do that and I move on. And that money is out of sight, out of mind over at the profit and tax.
Can I ask a question?
Mm-hmm.
I have a question. So I saw John had a comment earlier about doing this with your his brother's personal account, and I've had some success on my personal level with the different accounts, and I'm starting to see, I think, where I'm messing up. It's on making the payments. I have one credit card, and this applies with my business too. I have one business credit card. So that means that even if I were to separate this out, which I love this idea, into the different accounts, if I have an operating expense, I'm going to pay with this totally unrelated credit card. And then I've got to pay that bill out of maybe my income account. Then I have to pay myself back into the operating. Do you know what I mean? It's how do you control where sometimes you're paying with a check, sometimes you're paying with direct deposit. Sometimes you're paying with credit card, so that as it goes out of the right bucket.
Right. So, okay, let's go back. So first of all, this credit card, is this a personal credit card or a business credit card?
Well, I've been trying to do what you're describing personally, but now I want to apply it to business. So for business, I have a business credit card, and then I just have one business checking account. So I'd like to tease it out into eventually multiple accounts like what you're outlining here. But then it just starts to become, and then I feel like I'm paying myself back into different accounts, and then I get behind on doing that.
Okay, so let's go back a little bit. So first I'll deal with the business side. So I have a business credit card that I put several $1,000s a month on. And how I handle that is it's paid out of the operating expense. That credit card, all that's like my subscriptions, my stuff that I have to pay for anyway. And all it is operating expenses. And so what I do is when I allocate my money on the 10th and 25th. We'll talk about that in a minute. Whatever my credit card balance is on the 25th, I pay that balance off with what's in my operating account. Whatever my credit card balance is on the 10th, I pay that money out with what's in my operating account. So this is what I would recommend for you. Don't start out trying to implement 5 accounts. Start out with 3 accounts. Start out with a profit account that you're doing at least 1% to, and a tax account, because we know taxes are happening. So start out with the profit account, start out with the tax account. And then once you get comfortable with that, then you start adding a lot of steps. Because a lot of times people do shoot themselves in the foot because they think, oh, I love this, this is great. And then they go open 5 accounts and things go completely haywire.
Thank you.
Does anybody else have any questions?
Yes, I have a question. So if you allocate X amount of money for taxes and you're paying it every quarter, if there's an overage by the end of the year and or the quarter, do you just leave that money in there, or do you transfer it to another account?
No. So guess who gets the overage?
I do.
Ding, 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 ding. You. So I'll give you an example. Last year when I settled up with my taxes, I pay quarterly, but I have to settle up at the end on April 15th. So I was so excited because I filed my taxes in March and I needed $6,100. Well, guess who had $9,500 in their account? Me. So I paid that $6,100 and I took the rest that I had allocated and I paid for my summer vacation that I didn't get to take. But that's a profit distribution for you. I mean, some people will take it and put it back in the business, but this is about serving you. And some people, they don't like to have extra money. Some people just want to break even on it. For me, I like putting a little bit more than I need because I get to do something great for myself and don't have to worry about the business. Does that make sense to you guys?
Absolutely. I like that.
And like I said, you know, some people, you know, I actually have clients, they make it a game. They want to make sure they don't have more than a penny, you know, more than they need set aside for taxes. I don't care how you do it. All I want is for April 15th to not be anxiety every year. Because when we had jobs, we didn't worry about taxes. How do we create jobs for ourselves? And now all of a sudden we're worried about taxes. All right, so let's talk about the frequency. And so this right here depends on how you look at your money. So this is an example. Most people do it on the 10th and the 25th. But I'll be honest, for most of my clients, this doesn't work. Usually they look at their money once a week. Now, this is what I usually say. When you're looking to make your allocation, it needs to be systematic, meaning that you do it the same time all the time. So if Tuesday is going to be your day to sit down and take 20 minutes to do your allocation, Tuesday needs to be the day. We don't need to be doing it Tuesday this week, Thursday this week, Saturday. it needs to be systematic, meaning that we do it on those days all the time. And the reason why is it's going to let you see what's happening with your money. Also, because some banks, it takes a day or so for money to transfer. If you're in there making allocations all the time, you could end up with some overdraft. So we want to make sure that we're systematic about how we're doing this. As again, I said, I look at my money on the 10th. I look at all my deposits on the 10th. I do my allocation. And like I said, that money that I've transferred to my expense account, I pay my credit card, whatever my credit card balance is that day, I pay that balance. And then the rest of the money is left in there to handle payroll and whatever expenses of my business are paid, not on the credit card. And then on the 25th, I do the same thing over again. For most people, the 10th and the 25th does not work. Most people usually have to do this once a week, but I actually have a few clients that do it once a month. It really doesn't matter to me how you do it, but you do need to get an idea of how your money comes in. Does anybody have a question about the rhythm? Okay, then I'm gonna move on. All right, so we talked about those profit distributions. So March 31st is coming up. All the money that so I do 10% of my revenue. So every time I look at my money on the 10th and the 25th, 10% of it is going over to another bank account. I'm going to take half of the money that's in there. I'm going to do something nice for my employees. I'm going to do some things for myself. And I'm going to pay a deposit on vacation. And I'm not going to worry about my business because I intentionally set that profit distribution aside for myself. And the reason why I'm going to do half is because I still have a little emergency fund for the business. So if something happens, a computer breaks or whatever happens, I'm not worried about it because I always got a little cushion in there for emergency. How does everybody feel about that? Profit distributions. We need more of those as business owners.
What would you recommend? Like, what are some in terms of a breakdown of income, profit? And I know it varies, but is there like not necessarily a general rule of thumb, but what is on average that you see in terms of what amounts is allocated to each category?
So again, it goes back to bookkeeping. First off, so this is usually where I say start with. Start with the amount of income that you're making. Look at your current expenses. So what you're going to do is you're going to look at your income and you're going to do your expenses, and you're going to do income divided by revenue. And that's going to give you a percentage. So you need to know what percentage of your income is to revenue. So I find that a lot of business owners are not sure about that. So let's talk about what that looks like for real. If you made $10,000 and your expenses were $5,000, 5,000 divided by 10,000 is 50%. Do we have an idea of how we figure out what our income is to revenue? I'm sorry, expenses is to revenue. Because we need to get an idea of that first. The second thing we do is we figure out how much we need to make. How much money as an owner do I need to make to take care of myself? If we're looking at $10,000, is that 30%? Meaning I need $3,000 a month. Is it 20%? So we start with where we are on the expenses right now, break that out. What I need as a owner to take care of myself. And then we start with the profit and tax. But it's about serving you first. So we need to make sure we're doing something for owner's pay. And like I say, on the profit and tax, on the profit, you can do 1%. You can at least start out doing 1%. And then on the taxes, of course, you need to look at what your tax rate is and start figuring figuring it from there. And let's keep in mind that 15% is 15% of revenue. So when your taxes are actually being done, your expenses are not calculated in on that yet, any deductions you have. Does anybody have any questions before I go move on to the next? All right. So the next thing we're going to talk about is debt. So typically, when I'm doing profit first with clients, I'm looking at their debt. And when we're setting up these allocations, we're setting up an allocation to pay off the debt as well. Now, typically, we do need to freeze the debt to be able to pay it off, because if you're still just doing the same thing over and over again, you kind of just spinning your wheels. But typically, when I'm working with profit first, if a client has 2 credit cards, we usually start with the lowest balance. And when we're looking at the allocation, we're paying extra towards that card. And then we move on to the next one. If they're wanting to pay debt off ahead, meaning if they have a loan and they want to put some extra money to the loan, we'll go ahead and build that in the allocation as well. And all of this stuff that I've shown you, you can implement it in your personal finances just as easy as you can into your business finances. And then the last thing we're going to talk about is accountability. So I'm not going to lie to you. It's a paradigm shift in the way you think about money. And at first, it feels very funny. It feels uncomfortable because we just don't usually do it like this. And so a lot of times I'm more of accountability to my clients than anything, just to make sure they stay the course. So I'll give you an example. I had a client in 19, he wanted to buy a house. And so he wanted to save $100,000 for the house. And so we made an allocation and we started putting it aside. Well, when he gets about $68,000, he comes talking about a car he wants to buy. And I was like, well, you said you wanted to pay on a house. Well, we can still do that. And I'm like, well, if we take the money out and we play it towards the car, that's going to take us more from that $100,000. I want to get you what you say you want. So, accountability, really sticking with it. Even though I'm the accountant, I have other accountants that help me stay to my goals, help me stay to my expenses, making sure they're not going up more than I say they want to be up, making sure that I'm really sticking with the process. And what we do is we just look at each other's books. But whatever it is that you need to hold you accountable, because this is not going to happen overnight. Most of my clients that come to me, it takes us generally 3 to 6 quarters to reach their goals. It doesn't happen in 2 weeks. Does anybody have any questions about it all?
I don't have a question, but I have a comment.
Yes.
Perfect timing for all of this. Well, it's always perfect timing to hear this message, but I'm a fan. I have the book. I've had the book for a while.
Okay.
And I read it, and it's when I read it the first time, like you were saying, you get all jazzed about it and everything. And then I'm like, ooh, how am I going to do 5 accounts when I'm trying to stretch this money into 5 different accounts? And just I've had difficulties implementing it because the cyclicality of the way my income flows. Can you speak a little bit to that?
Yes. So the first thing is were you trying to do it based off of that 10th and 25th?
Say it again. I'm sorry, I couldn't hear you.
Were you trying to do it based off of the 10th and 25th, your allocation? Because that's what he says in the book. So first off, with that piece, for the most part, 10th and 25th does work. However, it does not work for everybody's business. So first of all, let me ask you if this was your issue. When you said it just didn't work, did you mean that it did not work with enough money to cover the bills in the business, or your personal bills?
My personal.
Okay. So
Because I've been like you were saying at the beginning of at the beginning of the discussion, I was just squirreling away everything because of the cyclicality of the business. I just wanted to hold on to as much as possible and not spend anything and not do that reallocation, because I didn't know if I was going to get like a big expense, and then if I didn't have any projects going on at that point in time, there was no income coming in at that time, or it was going to take a little while for the income to come in. So I just wanted to just squirrel everything away in that one account versus doing that breakout and paying myself and taking those profits, because I didn't know when that next that invoice was going to come get paid.
Okay. So one of the things that I would recommend for you is you need a business owner's operating account, owner's pay account. I'm sorry. And what that looks like is when you have this time when they a bumper crop, so to speak, a lot of business in, you're gonna have your money stacked up in this owner's pay account. So just example, say if you have a great season and you're able to stack up $30,000 in this owner's pay account, owner's pay business account, then you're gonna figure out what you need monthly, and you'll just pay yourself that monthly instead of just trying, because if you keep it all in that account, you can't tell what's what.
Mm-hmm.
So stack it all up in your owner's pay business account. And then what is it that I need from this business? If it's $4,000 a month or $2,000 every 2 weeks, whatever it is, just pay yourself the $2,000 every 2 weeks. However you need to do that. But you need to get it separated. And one thing I'll say to you, do not try to do all 5 accounts. Start with at least 1% to the profit account. And I would say start with a minimum of 5% to the tax account. But don't just try to start all 5 accounts out the gate. And like I say, I do have an allocation sheet. If you want to reach out to me about that allocation sheet. But
Okay.
what it is you drop the numbers in and it tells you what the percentages are.
Okay, great. I would love that. Yeah.
Okay.
Thank you.
Well, we can definitely.
Can you make that available to all of us? Maybe send it to the host, and he could just send it out to all of us?
Yeah, so I'll
Yeah.
send you the information on how to get that. Yes.
Okay.
Yeah, and I can make sure that everybody gets that after. I can talk to Masheka about getting it to everybody that attended. So no big deal. Yeah.
But that's pretty much it for me. Thank you guys for taking the time to listen to me. I hope that I was able to give you guys something. Does anybody have any questions about this process? And like I say, I hate to keep harping this, but does everybody get the importance of bookkeeping? Why we have to have bookkeeping to make this work? Okay. A lot of people like, no, you just get the bank accounts. Don't worry about the bookkeeping. That.
This has been really good and very informative. It has helped me, and now I'm able to go back and see what I need to implement. So thank you so much. We appreciate you and the EC for putting this initiative in place.
No problem. Thank you guys. Thank you guys.
All right. Thank you, Masheka. I appreciate it.
All right.
Yeah. Have a good one, everybody.
Okay.